SMCI is the requested stock from the audience. So I just saw who sent it in. Sorry, I just lost it. But anyway, someone from our audience wants your thoughts on SMCI.
All right. So the semis are in a little bit of a dumpster fire, as it were. Of course, technically, I believe this motion is actually more geopolitical than technical. And my reason for that is a lot of chip action and the like are, a lot of this stuff we're moving with China, and, you really wouldn't be surprised if we get up one morning and they go, no, you can't sell to China. Our administration says, no, you're not going to share anything with them anymore. We're going to put the kibosh on that. And so I think that's got a lot of folks concerned. Now, again, earnings deliver catalysts. And so what we have to think about is, has the chart moved back enough into areas of support that give us a fair buy zone? And that answer could potentially be yes, right? So we're looking at about 225 to 214, 225 for the monthly formation, 214 to 210 for that weekly formation, in terms of where's the last low that we might have undercut. And then we've got earnings coming up on November the 1st after the market. So if catalysts were not considered, we could look at something and say, all right, this is trading the range. And if it's trading the range as it comes into the floor, I can buy the low and I can sell the high. Now, let's think about what's happened since the last high in August of this month, of this year. Since August, we've moved maybe another 25 basis points. And then really all the chatter with China started in this candlestick, right? Big Taiwan business, blah, blah, blah. And then people came in and went, well, that was a savage dip. I'm sitting right at support here. Let's buy. And we made a lower high, and then a lower low, and then a higher high. So we've got confused traders. And so what I'm going to do is I'm going to add a hand-drawn channel and say, well, you know what? Maybe this is a bull flag. So how might I participate? Well, if it's me, I'm going to look way down here and I'm going to say, I'm going to wait for earnings. I'm not going to trade in front of them. I'm going to wait for earnings. I'm going to let it come in. And if the buy gets down to about 197 to 200, I'm going to wait for my first hourly bar to uptick, and I'm going long. And that's my supposition for these guys. Now, when am I going to cut and run? If I cannot get up over my monthly support edge of 225, bye-bye. No patience. I'm not doing it. Why? Because my trend is down. Yeah. And here's where I'm sitting. On a monthly chart, my linear regression channel is about sideways, right? But I'm holding a region that's inside one standard deviation. So I need to get up there for more upward growth. And if I can't, I'm going to leave. What 200 is a really nice round number. A lot of folks are going to go, I'm just going to try it. I'm going to hold the dip. Let's see what kind of reflexive motion we get. And if it pulls down savagely, we've noticed that when it pulls down savagely, we do get an interim bounce that takes us to prior levels of congestion or prior levels of a breakaway. So that's really what I would do. Positioning into the trade, if you're an options trader, two ways to do that. You can say to yourself, I think I want to buy an iron condor. Chris, that comment was just for you. Iron condor. So what I would say is go out into the future and buy something on these edges, 290 to 320, make it wide, and 225 to 205, right? Something 20 points wide. And what it will do is absolutely, it could deliver both sides to you. It could dip down and then you would close the put side of the condor, or it could dip up and you could close the call side of the condor. But I want to make this very clear from my mind. I do not expect us to see new highs in an environment that has added pressure coming from lending costs, operational costs, and employment costs. All of those are on the rise and will continue to rise, making margins much more difficult for these instruments to hold. So we are either going to have to be comfortable with getting less in terms of earnings per share, or we're going to have to look at something that is, I don't know, dividend bearing or whatever that beefs the other side up of, some of these stock names that we're looking at.